Thank you for joining us. This is Business Incorporated live from Lagos. I'm Chimeze Obi Iwago. Coming up on the program, oil price rises above $50 a barrel for the first time in 7 months. Intense protests against labor reforms paralyzes France. Plus, Beijing accuses U.S. of damaging trade after Washington levied new duties of up to 450% on a specific steel imports from China. Well, the price of oil has gone above $50 a barrel for the first time in 2016 as supply disruptions and increased global demand continue to fuel a recovery. The benchmark Brent crude price hit $50.07 a barrel in Asian trade today. The rise followed U.S. data on Thursday showing that oil inventories had fallen largely due to supply disruptions following fires in Canada. Brent crude has now risen 80% since it hit 13-year lows of below $28 a barrel at the start of the year. Beijing has accused the U.S. of damaging trade after Washington levied new duties of up to 450% on a specific steel imports from China. It was the latest move by the U.S. against cheap steel imports. The new tax to protect domestic production affects corrosion-resistant steel. Lower duties will be put on steel from a number of other countries. It comes 1 week after the U.S. raised taxes on cold-rolled flat steel, which is widely used in car production. Well, a lot to cheer from the global market, from the oil market to France and, of course, Japan, where the G7 summit is ongoing. Let's talk to Javier Arguedas, DWTV Channel's TV financial correspondent, to talk us through these. Good afternoon, Javier. Well, Javier, investors are looking at France today, where intense protests against labor reforms are paralyzing the country. How risky is this resistance for the French economy?
Well, this is, in fact, very risky for the French economy because everything that we are hearing, from power outages to trains or airplanes that could not be circulating, all of that costs money every single day. But on top of that, it reduces France's credibility and the image that the country has as a safe haven for investments. In fact, Ernst & Young, for example, in its latest report, is assuming that France is going to lose 2% in investments this year alone. And that is assuming that this labor reform will somehow be put in place in the end. Now, if France does not advance with this labor reform, well, the conditions are going to be even worse for companies to invest in. France right now is not really attractive within the European Union to make business, and if the labor reforms do not get passed through the necessary steps in order to implement them, well, then we will probably have some investors leaving the country, and that will definitely not help the economy. So there is a big risk on this.
Now, let's look at the oil market. It seems like a sustained recovery is in place now. How are the markets dealing with this assumption?
Well, the markets are actually reacting quite positively to it. We have seen the DAX, the main German index, in the green for most of the trading session today, and one of the most important supporters of those gains are the assumptions that the oil price has finally stabilized. Now, the most important sector perhaps that is profiting from this right now, aside from the oil and energy sector, of course, are banks, because let's not forget that oil companies tend to have very big investments. They need banks at their side, and many banks had feared that the failure of oil companies as an effect of the low oil prices could have ended up affecting the banking sector as well. Last year alone, in 2015, about 40 companies filed for bankruptcy as a consequence of the low oil prices. Many thought that that trend would continue this year, and those fears at least are now disappearing, or seem to be disappearing, so that's why we are seeing some of the banks reinforced. Of course, we do not know how long this is going to last, but many say that we should count on stable oil prices at least until the end of this year.
Now, Javier, let's see what's happening in Japan. The G7 meeting is taking place there, where stimulus measures keep missing the targets. What's next for the Japanese economy?
make at least a combination between monetary policy and reforms. But let's not forget that those two are often seen as counterparts. If you do not have success through monetary stimulus, well, then you definitely have to change the system, because you're clearly pumping money into a system that's not working. In the case of Japan, they will probably have to tackle the labor market. They liberalized the labor market perhaps a little too much, so that many Japanese workers do not have stable and safe jobs they can rely on, and that is somehow putting a brake on consumption, which is also an important driver of economic growth. That is one of the plans that the government now has to somehow create more jobs, of course, and also increase the quality of labor in Japan in order to foster consumption. We'll see if they can make that happen, because as we know, labor reforms and reforms in general are always very difficult to implement, and most importantly, it takes time. Back to you.
Well, thank you very much, Javier. Thank you for your time.